Hi, everyone. Logan Hertz here with Hazeltine LLC. We have back the man, the myth, the legend, D'Andre Clayton, velocity banking extraordinaire and infinite banking expert as well. And we're going to go through some of the typical questions, objections we get for velocity banking, because of course we all know velocity banking is a scam.
Absolutely.
And first lien HELOCs are absolutely evil. I mean, they are just evil, as opposed to a 30-year mortgage, which is totally fine. So, D'Andre, you want to take us through some of the devious ways in which we evil people manipulate these poor, hapless, naive customers
Oh
into
man,
doing velocity banking? I mean, it's such a racket for us, isn't it? And
I think
like I said, I mean, it's a huge racket for us. I mean, we make, wait,
uh,
how much money do we make off of the loan? I'm confused.
I'm not a loan officer, so I don't get paid off of mortgage products.
Wait, hold on. You're telling me that we put
Yeah,
one of these losers in a first lien HELOC, but then we don't make any money from the sale
yeah,
of the
no,
HELOC?
no, nothing, man, nothing,
What?
nothing.
I thought this was like some kind of racket. I thought there was this amazing scam. You're telling me I make $0 from the first lien HELOC because I'm not a mortgage loan officer?
Yeah, yeah, that's
Man,
true. That's
we need
true.
to go to evil school. This isn't working out very well, man.
We're not being evil good, I guess. We're not being evil good. I
I need a
guess
better
would be
racket,
the right
man,
way
where
to
I
say
can make
that.
more than $0 for scamming my customers.
That's hilarious. Yeah, no, you are correct. That is one of the things that oftentimes I always ask about scamming. What is the end result of scamming? Right. So, what am I supposed to gain out of the scam? You haven't been charged. I don't make money off of the loan. So, what is actually the end result? And because the appointments are debt management, it's hard for me to understand why somebody would believe it's a scam. So, the first thing I'll say is anything that is a scam moves very fast before I'll even get into it. Scams don't underwrite you. So, I just want to let y'all know that ahead of time.
Yeah, they'll take your money. There's no qualification
Yeah,
process.
there's no scam artist who's like, hold on, I need you to, how healthy are you? Or, or what's your credit score? How great are you doing? That's typically not included in scamming. But one of the things we hear about it being a scam, which is ironic because we talk about the interest rate, the HELOC having a higher interest rate than the mortgage, and we talk about the variability of the rate, right? And what's interesting about that being called a scam, I don't hear people calling ARMs a scam because there are amortized mortgages that have variable interest rates. First and foremost, don't
Mhm.
know if you people know that. Many people do them for certain reasons. And I don't hear people calling balloon payments a scam either, which is interesting. But hey, we're just talking about velocity banking and the HELOC today, right? So the interest rate is higher than the HELOC. That's true. But you also remove the actual defined payment of a mortgage when you have a first lien HELOC. Your interest rate is not just tagging on top of a defined principal payment, right? So that's one way to think about it. In essence, it's not a comparison of a mortgage with a $2,000 payment and then, okay, there's an interest rate of 3% on the $2,000 payment, and then there's an interest of 6% on a $2,000 payment mortgage. That's not an apples to apples comparison when you're talking about a HELOC. You're talking about more so an interest payment of 3% on a $2,000 mortgage, and then the removal of that mortgage's payment, and you having the only thing to do or satisfy is actually the interest payment and not the principal plus interest. So there's a priority that happens there because there's no schedule that the money is having to meet. So therefore, the interest rate is not as strong of a component when you're dealing with the first position HELOC, I guess you could say. What if it goes up? I always counter this question.
Because we always know interest rates only go up, D'Andre. They only go up ever, right?
I've always countered that question. Well, what if it goes down too?
It's funny, all these worst case disaster scenarios only happen when you're doing velocity banking, right?
Right.
When you're putting money into a 401k or doing any of the standard conventional wisdom, they have none of these questions, right?
Right.
Because when someone calls something a scam, to me, it's like the boy who cried wolf. To me, it's actually very dangerous to throw that word around too much because there are some actual scams out there, okay? But they fall into a very narrow category. I have never called a retirement account a scam. 401ks are
Mm,
not a scam. They
they're
are
not.
not a scam. They are a legitimate financial product. I have a
Mhm.
problem with the way they're often sold. I have a problem with the way people put money into them without thinking about it, but I will never call them or mutual funds a scam. They're not a scam. Okay.
Right.
So it's important that we use words precisely because when we throw that word around too much, what happens is I see this a lot. People have this financial PTSD where they're afraid to do anything because
Yeah.
everything's a scam now. They're afraid of everything. Any email that solicits anything from them is a scam. They automatically pull away and they don't do anything and they get this paralysis and they miss out on so many
Right.
great opportunities. So when people throw out the word scam, what they're saying is it's not conventional wisdom. And therefore, I'm going to reflexively knee jerk call it some horrible name so that I can absolve myself of the responsibility to actually learn about it. If you
Mhm.
take more than 30 seconds to actually dig under it and learn about it, every single time I hear someone say that's a scam or that's a ripoff, if I take the time to learn about it, I found out no, it's a legitimate financial product. Maybe it's not for you, it's not for everyone, but they all have their place. All these financial products have their place. They're not scams. There are actual scams out there, okay, but none of these are them, right? And so we need to be careful about throwing out incendiary terms like this that then lead people to knee jerk reflexively reject an entire class of financial products to their own detriment, right?
Yeah. Yeah. Very good point. Very good point. There we go. I can see you now.
So I just wanted to throw something else there too, because one of the ones we're going to come to is DeAndre. I can just
Yes.
make extra payments on my mortgage. I don't need this stupid first lien HELOC. You're trying to take all my money, right? And let me just grant that for the sake of argument,
Mhm.
that would work. Let's just grant that that would work. Okay. This comes to me from someone who's living their life on a spreadsheet. Like they run the numbers, they run the spreadsheet. They see I can make extra payments on a mortgage and pay it off.
Mhm.
Okay. First question in my mind is why aren't people actually doing that? When you look at the success rate, the actual result of the first lien HELOC, the success rate is enormously high, right? Like people are paying off their homes in 5 to 7 years. That's not just a marketing term, that's actual experience.
Right.
Whereas with mortgages, people are not doing that, right? And so the question becomes wait a minute, are you really suggesting that someone should dump their entire income into their mortgage? Is that really what you're saying? Now, maybe you can show me on a spreadsheet that that would pay off the house faster, but that would be a horrible recommendation for someone to throw their entire income at the mortgage. Yeah, of course they're going to pay off a lot faster if they do that, but you cannot safely do that with a mortgage. The whole point of the first lien HELOC is because it's a two-way street. Now I can put a lot more money into it because I know I can safely pull it back out, right? Whereas with a mortgage, you can't do that. And this is where the amortization schedule comes in. But I know I'm doing a lot of talking here, but the problem with a lot of our velocity banking critics is they're so full of hatred and vitriol and they throw out so much name calling and they think they're justified in it, by the way. They really don't believe that they're behaving in anything other than a professional manner, which is sad.
Mhm.
That sometimes they actually do make legitimate points, but it's couched in so much rhetoric, it's hard to respond well to it. So you've seen actually the Kwok brothers and Denzel Rodriguez come out and say, because they have a bit of humility to say, you know what? I was actually kind of wrong. Simple and versus amortized interest.
Mhm.
When it comes to the calculation method, they're actually the same thing. They're
Mhm.
actually the same thing, right? And so that was one of the points that some of the velocity banking critics were making, which is correct. Okay. But what they're doing is they're focusing on one technicality as if that invalidates the whole strategy when it doesn't, right? It's like, okay, it calculates interest the same way. So if you just make the monthly payment on a mortgage and pay it off over 30 years, it will be the same. But who
Mhm.
actually does that? Again, life doesn't exist on a spreadsheet. Most people are refinancing their mortgages every 5 to 7 years, or they're buying another house and taking out another mortgage, which means this is why amortization does matter. Everyone spends most of their life within the first 5 to 7 years of that amortized mortgage, which means the vast majority of their payments are going to interest, not principal. So,
Yep.
to a point that you made about the psychology, the first lien HELOC is encouraging. Your paycheck starts coming in, and boom, you see that balance coming down, and it's very encouraging. Whereas with a mortgage, 3 years in, you look at your balance, it's barely moved,
Yep.
right? So a lot of our critics, I think, are just living their lives on a spreadsheet, running numbers, missing what you and I see, which is the psychological component to it, which matters much more in success. And I know I said a lot there, going down a huge rabbit hole.
Yeah. Now that there's so much truth to what you were saying. So on the first part, just going back to the idea of it being a scam, many of the same banks that offer you a mortgage offer a first lien HELOC. Hold on, let me say it one more time. Many of the same banks that offer you a 30-year mortgage also have a first lien HELOC in their portfolio to be able to offer their clients. If you had any time speaking with Anthony, one of the things he mentions is why a lot of people don't know about it is because the only people who gain access to it through the traditional bank is the wealth management team, right? As far as who they're offering it to. So that actually covers why many people don't know about it, haven't heard about it, so on and so forth, and why they may think it's a scam. But meanwhile, they could have a mortgage with the same company that offers a first lien HELOC. Now, as the other portion of making extra payments towards the mortgage, like you said, the first thing I always ask people is, why aren't you? If it's that easy to make those extra payments, do it. You're right. Fine. I'm completely wrong. You are so right. What you find is that people don't connect what is keeping them from making the decision that is the spreadsheet decision. And we have to help people to understand that there are things that is aligned with them psychologically and things that are not aligned with them psychologically. And one of the things I tell people in my appointments, I tell them that they are used to initiating an extra payment towards a debt that revolves more than they are towards a debt that doesn't. So traditionally, when people have a car, they're pretty used to staying on the 3-year, 5-year term period, whatever their term period is on paying it. They're used to just sticking to that payment. When they have extra money, they usually default that to the credit card because once the credit card payment has been made, the money becomes available once again. So they feel comfortable at the aspect of, well, I'm not out of the money technically. Like I didn't lose the money technically, which is normally how people feel when it comes to making those extra payments on the mortgage. I refer you to there was a Dave Ramsey episode and a guy had actually paid off his home after 2 years. So he listened to Dave Ramsey and it was about 25 months and he said, "Man, I paid off the remaining $250,000." So he was a high income guy, right? So he's calling Dave Ramsey because he has a farm and he wanted to get a tractor. And he's like, "So, hey, Dave, I was thinking, should I get a HELOC to be able to take care of getting the tractor?" So he was thinking of getting just a second position HELOC to take care of getting a tractor. And Dave fussed him out and told him, "So why'd you get out of debt? You got out of debt just to get right back into debt." Right. And the reality is that he went to an extreme. Most people cannot stomach the idea of putting $250,000 into a home in 2 years to pay it completely off, knowing that they don't have access on the other side. And his story kind of helped you to understand that when it came to, okay, well, I need like 55, 65 grand. He's like, what do I go for this now? I put all my money into this house. I've done what you told me to do, but I have other needs. So one of the things I always like to tell people is life perfect? Is it if you're a husband, is your wife going to get pregnant one day and possibly leave the workforce? Well, if that's the case, there's a chance that if you were putting extra money onto the mortgage, you're probably going to stop at that point, right? There's surveys and there's ways that we can notice that most of the time when people have a hard time investing or paying extra on to debts like a mortgage or a car, it's usually when life circumstances happen, right? Somebody in the family got sick and we're paying this bill. I'm not going to sit here and invest money and pay this bill at the same time. I'm not going to sit here and speed up paying the house off when I need to take care of this health bill. And that's the nuances that typically happens in a real life. And then they're not taken into consideration because I get this all the time. But my payment never changes on a mortgage. So you mean your taxes aren't increasing? Because that's the only way your payment doesn't change. The value of your property would have to be locked and not growing as well for your payment not to or you're just paying everything on a yearly cycle, which is not likely for most Americans. They can't afford to pay things on a yearly cycle, that whole lump sum at that time. So most of them escrow it in into their monthly payment. And so that goes up and you're not recognizing that that's going up. You're just dealing with it. So that's a variable too. People don't think of that as being a variable rate, but if my mortgage just went up by $200 or $300 because my taxes have increased because my property value has increased, well, that feels the same as a variable interest rate. If I'm quite frank about that.
Yeah. Now, let me ask you a question related to this. Why do the critics of velocity banking get so uncontrollably angry? Why do they have to spew so much vitriol just because they happen to disagree with this financial strategy? Why do you think that is?
I think so. I studied psychology when I was younger, right? When I was in college. And there was a statement that really helped me to start dealing with people better. And the statement was around proving someone wrong and why it's so hard to prove someone wrong and how justifications come about and all that kind of stuff. But what it stated was that the human mind is so afraid of being proved wrong, it will default to martyrdom. So you have people who believe in something so strongly, even if they really don't believe in it, it's become a part of their life so much that they believe it wholeheartedly because quite frankly, most have not really read their mortgage documents. And that's on the industry because the mortgage industry does not comb through every line for the person to understand, hey, this is what you're getting into. Most have not read it, right? And so their threatening aspect is if you present this to me, what you're telling me is I made a bad decision and I'm dumb and I'm not good and I'm not that. And I will die on this hill to tell you, no, you're wrong. Right. And that's a psychological thing. If you think about martyrs at all, that's the idea of a martyr. If there was something that I truly believed in, I'm willing to die for it. Right. And that's typically what happens to most people in today's age. The only problem is they don't connect their martyrdom with education. They don't know a lot to actually feel that way, to garner those emotions where they feel that way. But that is something that we see, I think, even more and more so as social media continues to grow and all of that kind of stuff.
Metastasize.
Yeah.
Yeah, it's interesting that you use that word martyr. You're right, because I remember the people who call me all sorts of terrible names when
Hmm.
I respond in a calm, professional manner, they think they're the ones being persecuted, right? There, you
Right.
remember some of the guys we've read some of the comments, some of the ones that I actually could read, most of them I cannot because
Right.
there were so much bad language in them. But he's saying that, oh, we're being persecuted for speaking the truth and people are banning us from their channels for speaking the truth. No, you're getting banned from the channel because you're engaging in a lot of horrendous name
Because
calling and
you're disrespect.
terrible
Yeah.
rhetoric. And yeah, that's why. It has nothing to do with the fact that you're speaking the truth. You're not being
Right.
martyred, okay? You're not a martyr. You're being unbelievably rude. So it really doesn't matter whether your points are accurate or not. if you're not gonna behave in a professional manner,
Yeah.
then people are not gonna wanna listen to you. But of course, in their minds, they're being completely calm and professional in their minds, right? Which is
Yeah.
kind of sad, right? There are very few people who deliberately choose evil. Usually they choose evil under some aspect of the good, and there's something about their ego or their attachments that leads them to see it as being good, right? Sort of the way that all of us, like we tend to exaggerate the affronts against us like it's a massive injustice, but we don't even
Right.
notice when we actually trample on other people, right? We don't
Right.
notice that.
Right.
Um,
Right. Yeah.
so yeah,
The
it's interesting.
the book How to Win Friends and Influence People is really important for people to take a step back and think about their communication style with how am I coming off with what I'm trying to defend, or what am I trying to are you trying to win the person over? Are you trying to influence them, or are you only trying to get your point across? Right. And you'll see that online that people are adamantly engaged in getting their point across, not necessarily the ability to influence, right? Because if it was the ability to influence, then you would engage in good debate, right? You would engage in, okay, hey, I don't understand this, but why do you guys say this right here? I'm trying to figure this part out. Missing this.
Right, right. I
Um,
think I've said before there are two types of people. One type of person wants to win an argument.
right,
The other type of person wants to find the truth.
right.
And I'm the sort of person who wants to find the truth because you know what? In order to find the truth, you know what you have to do, DeAndre? You have to lose an argument. You have to be willing to lose an argument because then that means you learn something. Because
Right.
that's why I don't get into arguments. I just don't find them to be productive. I find them to be
Uh-huh.
incredibly stressful, and and everyone just gets more hardened in their own views
Mhm.
when you get into these debates. So I prefer just to engage in discussion and research and so on. And I'm always seeking the truth, and I'm always learning.
Yeah,
I'm always learning.
yeah,
Right.
yeah. Well, I mean,
I'm not trying to get into an argument, let alone win one. I avoid arguments.
the most intelligent man is the man who knows he knows nothing at all. So if you take a step back and you realize that the more you learn, you realize, oh man, I didn't know anything about that. And then you're like, what else don't I know about? And you take a step back in your ego on certain matters like this. And I think that's really the issue surrounding infinite banking. That's the issue surrounding velocity banking. There is quite a bit of ego associated with not even well founded results, right? I see some infinite bank, I see some, I guess, like villains of something like infinite banking. And if they provide a solution for what they're doing and it works for them, I'm actually not mad at that. I'm not mad that you haven't come to realize how this could be beneficial if what you've been doing has been beneficial. I think where the issue is, though, is the bullhorn could be very loud and it can attach to people who have no success. And now they speak as though they're this person who is doing extremely well. And the numbers don't actually flush out that way. So rather it be, I can make a bunch of mortgage payments, I can make additional principal payments. That's true, but you don't. So let's focus on why you don't actually, instead of focusing on what you can do. Let's focus on why isn't it that you're doing what you know could work better for you. And then that's how you understand why the velocity banking may make sense. It may be more aligned with how you subconsciously think so that you can be successful, right? All of these strategies to work. It's just, do you have the discipline to follow is typically going to be the answer. Human error is the biggest part of everything.
Yeah, the automation of the first thing HELOC is so important. You can absolutely do velocity banking with a second position HELOC, and there's nothing wrong with it for sure.
Yeah.
Some people have to start there. But obviously, I think it helps a lot when you with the particular first lien HELOC
Yeah.
strategy that we're using. By the way, because I'm sure you get this all the time, DeAndre will ask people, "Oh, have you heard about the first lien HELOC strategy?" They're like, "Of course I know what a HELOC is. Yeah, I know all about that." Okay. Yeah, I'm not talking about any generic home equity line of credit. Okay. I'm talking about a
Right.
specific strategy, velocity banking, right? That's
Right.
another thing. People, I think you saw this actually when I posted a related video about why infinite banking is a scam and whole life insurance is evil.
Yeah.
And someone had a knee jerk reaction to that and thought I was actually serious about it. Right.
Yeah.
And I'm
Yeah.
like, you didn't even bother to spend, it would have taken you 5 seconds,
To get it.
5 seconds to find out that actually that title was sarcasm. I
Yeah.
am promoting infinite banking and whole life insurance, but he just made a knee jerk reaction. Right.
Yeah. Yeah.
And so I had a guy comment on that video and say, I only watched the first 30 seconds and I agree with you. Right. And I actually, what I said was, you know what? If you watch 30 seconds, you're doing way better than the average
Wh-
person. The
Which
average
is
person,
the same.
intelligent people, intelligent, successful people, not dumb people, won't even take the time to watch even 30 seconds of the video. They will form an opinion and be 100% hardened in that opinion
On the
after
title or
ha-
thumbnail.
after half a second, just
On the
looking at
title
his
or
instant.
thumbnail. Yeah. No, I mean, and it's something that we have to internally fight. Because I'm not saying I'm not guilty of it either. Like, the way that I got introduced to you was through the financial malpractice video. But when I clicked on it, I was clicking on it as, watch, he's going to be talking about insurance, guys. That's all these guys on LinkedIn talk about. But I clicked on it with an open mind to listen to it, though. But I had a preconceived notion about what I was going to hear, though. I'm not gonna lie about that. You know,
Mhm, mhm.
I'm happy I heard something different. But but so it's just we need to slow down. People need to slow down to understand, not only to understand the concepts, but to engage in helpful debate so that if you do have serious questions, they can be answered. Right.
Well, clearly you're a scam artist, DeAndre.
Oh,
You're evil.
definitely.
I
All day.
mean,
All day.
first lien HELOC is pure evil.
Yeah.
This is just a
All day.
total scam. I mean, come
All
on,
day.
man. You're so transparent. I can tell
I,
you're a scam artist
I forgot to
just
wear
from
my
looking
gold
at you.
necklace too with the
Like,
diamonds in it. I forgot to wear.
are there any other pieces of evidence for the evil that you'd like to discuss?
So this one is in particular to people who I think, because I feel like Caleb kind of touches on this a little bit because Caleb loves mortgages, right?
Okay.
So he talks about the 30-year
I
mortgage.
don't follow Caleb as closely as you do, apparently.
Yeah,
So yeah. Okay.
but he does love the 30-year mortgage. And from what he talks about with the 30-year mortgage is, why don't I take this smaller payment and then invest the rest,
Uh,
so to speak, right? And to that, I'll
You
say,
you mean buy term and invest the difference?
yeah, but doing it with a house, basically, right? It's doing it with the house. And to that, while I understand his premise, because some people, if you are a highly responsible person, it makes sense, right? To say that, and that you have so much going on and you're really making your money churn all over the place. I'm not necessarily mad at that concept. I think what is being missed when it comes to velocity banking is the ability to pay off debt and keep opportunity at the same time. So
Yes.
when a person prioritizes going to a 30-year loan because, hey, I can keep this low payment while I'm doing these other things, those while I'm doing these other things aren't taken away from you with velocity banking. They're enhanced, right? And actually, they make the cost less while you're doing those other things, right? So I think that probably needs to be said, that, yeah, opportunity cost is a thing. And if I was focused only on opportunity cost from a micro perspective, I could see a person saying, let me lock in a low interest rate mortgage for 30 years and then just invest like crazy outside of it. I could understand that concept and I'm not mad at it. But if I
Yeah,
was,
the question is as compared to what? I
yeah,
mean, if you're comparing a 30-year mortgage to a 15-year mortgage or to paying cash, yeah, I could see why that
right.
makes a lot of
That
sense.
makes a lot of sense.
Because you pointed out something really important, which is that if you are doing a 30-year mortgage, okay, you have that mortgage payment and you can only invest the difference.
Right.
If you do the first lien HELOC, you have access to all of that money. So what you've done
Yeah.
is you've given your dollars to job, more than one job. It's like infinite banking, same thing, right?
Yeah.
If I go in, let's say I have $100,000 mortgage and I have $100,000 in savings. Now I have one of two options. I can take that $100,000 and have a paid off house, but then I don't have the liquidity. I don't have
Hmm.
access to 100,000.
Hmm.
Or I can keep the 100,000 but then still have debt that I'm paying interest on, right? But
Yeah.
if we're using velocity banking or infinite banking, now we can do both. So if that $100,000 is not a mortgage, but a first lien HELOC, I can take the $100,000 in savings, pay it off completely, and still have access to it because I have access to 90% of the equity in my home that I can use
Right.
for opportunities. Same thing with infinite banking. I could take that 100,000, cycle it into my whole life policy, then take out a policy loan and pay off the mortgage. And now I still have all that capital inside my whole life policy working for me, right?
Right.
So I can have the paid off debt and still have the money working for me in liquid.
Yeah. And in actuality, you're actually handcuffing yourself even more than what we're stating right now from the 30-year mortgage and then invest the rest. Because if you have a home, naturally, it also grows its own value. So there's money that's going to be added to that line of credit that is more than what you put into it in the first place because the value of the property has gone up over time. So you're thinking about that in a standpoint of I can keep the 30-year mortgage and maybe your escrow. You're paying more on the 30-year mortgage with taxes going up in those monthly payments. But when you pay more on the taxes inside of the HELOC scenario, you're paying more because you have access to a higher line. The HELOC is of the value of the house. So if that's going to be the case, now you actually have more money that you could invest with than just the difference of the payment and your income or whatever the case may be. You have the difference of the payment, your income, and the growth of the property.
Right.
Right.
Right. So when you're paying down a mortgage, you're just paying off debt. Your
Right.
house goes up in value, but it's not really benefiting you. All you're
Right.
doing is paying more in property
Right.
taxes, right? It only benefits you if you sell it or if you refi or if you
Correct.
refinance, which then you got to keep doing that and paying the fees each time you do that. With a HELOC, you're benefiting in terms of paying down the debt and participating in the increase in value of your home because you have access to that
Yeah.
equity.
Yeah. Absolutely. And
So,
and you
I,
can invest in bigger things. So that's another thing too. As long as
DeAndre,
you invest.
it's still a scam. It's
It is
still
though.
evil.
It
It's
is. It is.
totally evil. I can see through you. I
It,
can
it
see
is
through you.
total. Total.
I mean, I would try to imitate our critics at this point, but I can't
Yeah.
use too much of that language. I won't be as disrespectful as they are. But the sad thing is they don't think they're being disrespectful. That's what
Right.
makes it so sad. That's what makes it
Right.
so
Well, because people think that if they're honest, it's okay to be disrespectful. If their view of honesty
But
was wrong.
DeAndre, what if the bank can freeze my HELOC, the evil bank? They'll take it all, lock it up in jail. They'll freeze my HELOC. You want to address that one?
So that's a good question. And I will say that the freezing is more likely in a second position scenario. It doesn't really happen on the first position. I guess worst time we could point to is 2008. They weren't freezing first position HELOCs in 2008. Now, are there economic things that could happen to cause a freeze? Let's say, well, you wouldn't even be here if the freeze happened. You and your spouse would die if you both were on the loan. That would cause a freeze in the line. The lines also have tenure. So, you have your draw period, usually a 10-year draw period. You can refi that draw period without adding interest, I guess you can say, to the loan. But you're not really facing freezing as a serious issue in the first position HELOC. Second position, maybe. But first position,
Yeah. But let again, the question is as compared to what? Let's think this through. First of all, they're only bringing up these worst case scenarios when we're talking about
right,
velocity banking. If you're talking about your HELOC being frozen, well, what would cause your HELOC to be frozen, right? Think through that. And what you'll find is this. So I remember someone, he mentioned this in the comments. What if the bank freezes your HELOC? That means you have a payment going in required and yet you can't pull anything out. And I'm like,
That's a mortgage.
That's exactly the same as a mortgage. So what you're saying is the absolute worst case scenario is your HELOC operates exactly like a mortgage. You have a required payment going in and you can't pull anything out, right? So as compared to
That's
what?
too funny. He's
As
like,
compared to
"Oh,
what?
that's a
Right.
mortgage. That's a good point." No.
So again,
Yeah.
yes, is it possible the bank could freeze your HELOC? Yes, it is.
Yes.
Yes, it is.
Mhm.
Now, historically, it has not happened, as you pointed out. There were first lien HELOCs, and even in the worst 2008 crash, they were not frozen because the bank is in a better position. There's less risk to the bank because they're in first position, not second position, right? If HELOCs are being frozen, again, the question is, okay, first of all, as compared to what? But secondly, like what would cause that? And when you think through the scenario that could cause your HELOC to be frozen, you find out you're still in a better position overall if you were doing velocity banking with a first lien HELOC, even if there's some disaster scenario, whether it happens to you personally or in the economy at large, where your HELOC gets frozen, you're still going to be in a better position overall when you think that through.
Yeah.
And again, what's hilarious to me is that to me, they're just looking for excuses to not do it. That's
Mhm.
what they're doing. They're grasping at straws because, okay, think about, look at a 401k. I'll tell you a disaster scenario that can happen when you're putting your money in the market that not only can happen, but has happened. Something people don't think about is counterparty risk, not just market risk, it's counterparty risk, right? So
Mhm.
when you put your money into the market, you're doing it through an intermediary like Fidelity, like
Mhm.
E Trade, like Charles
Mhm.
Schwab, like Robinhood. Those counterparties might prove to be untrustworthy. MF Global, PFG Best. You can look up these scenarios where that counterparty was irresponsible and people lost everything. So that's a worst case scenario that not only can happen, it has happened, right?
Right.
And yet nobody will ever bring that up, right?
Yeah. Oh,
If you, because everybody will bring up, oh, my one grandma had a whole life policy and she surrendered it and it was horrible, right? That one,
right.
scenario, right?
Right.
But yet nobody brings up the fact that MF Global and PFG Best collapsed and people who had money with them suffered, not because the market went down, the market was doing fine, right? But because that custodian was
Mhm.
irresponsible. And DeAndre, you want to guess how many people went to jail for for perpetrating this fraud? Zero, 0. You know why? They hadn't
Well,
done anything illegal.
they didn't. Yeah.
When you buy a mutual fund, when you purchase a security, to use a word you love, when you purchase a security
Word. Should be
through
called
through Fidelity,
volatility.
those securities are held in what's called street name, which means you do not own them.
Right.
Fidelity owns it. So Fidelity can do whatever it wants with its own assets.
Mhm.
I've got news for you. You have no money in the market. It's not your money. These are not your assets. They belong to the custodian, right? And under normal times and normal circumstances, I'm sure everything will be fine. But that's an important distinction. Just like when you put your money in the bank account, it's not your money anymore. It's the bank's money.
Yeah.
Right.
Yeah.
So nobody will bring up this worst case scenario when putting your money in the market. Scenarios that not only can happen, they have happened.
Have happened.
And of
Yeah.
course, the market has crashed too. And yet nobody brings this up at all. They just mindlessly put their money into the market. But then when we're talking about an alternative strategy, they come up with all these worst case scenarios, which have never
Yeah.
happened.
They said the
But
same
even
thing
if they
about annuity.
did, you'd
Yeah.
still be in a better position, right?
Yeah. No, it's funny you mentioned that because that same analogy, normally, if you position an annuity, that's their mindset. They actually believe an annuity is the insurance company's money, but they don't believe that their investment is the broker or the RIA's money, which is befuddling to me that they don't catch that's what's going on. But we see it all the time, rather it be a person trying to talk about the S&P 500 and what they average. None of you average what the S&P 500 averages. Let's just go ahead and get that out the way because you're not directly investing into the S&P 500 because you can't. You have to have a
Right.
custodian, like what
Right.
Logan's talking about.
And not only that, it's a self-perpetuating lie that you can average 8 to 12% in the market. Yeah, in theory, you can. In theory, of
Yeah.
course. Behind every lie, there's a kernel of truth. Can you theoretically get that? Sure. I mean, if you look at historicals, could you prove that out? Sure. Okay. The question is, what are people actually getting?
Are you adjusting for inflation?
And nobody wants to admit that they're not getting it, right? This is the problem. We all have financial insecurity. None of us wants to admit if we have financial problems. And so everyone is under this impression that, well, everybody else is getting 8 to 12%. So I don't want to admit that I'm not getting it. Okay.
Yeah.
But Dalbar
Mhm.
did a study. You know what the average investor is actually getting in the market?
About 3%.
2.9%. That's right.
Yeah.
That's what the
About
study
3%.
shows. This
Yep.
is what people are actually getting. So you can talk about hypothetical 8 to 12% returns all day long. That's not what people are getting. And they're not going to admit it
Mhm.
because they're insecure. And I understand. We're all insecure. I understand that. If I had financial problems, probably wouldn't be announcing it to the world. So I understand. But it becomes a self-perpetuating lie because obviously none of us wants to feel less, right?
Right.
Like, oh, we're getting less than the other person.
Right.
None of us wants to admit that, you know what? I don't really like my financial advisor. I don't really know what he's doing with my money. I have trouble getting hold of him. No, nobody wants to admit that. Everyone wants to say, yeah, my financial advisor's great, blah, blah, blah. And you ask them, oh, yeah, what's so great about him?
Yeah. No.
Crickets,
th-
crickets, right?
That's just naturally how it is. People defend what they are used to, not necessarily what they know. So there's something to be said about something being convenient. Convenience makes people fall in love to a certain extent, and it makes them forget, oh, convenience comes at a cost, right? And
Mhm,
this cost could
mhm.
be super high, but I can be lying to myself, telling myself that no, there's no cost to this degree of convenience. But that's even on the side of I think it was sounds risky was one of the points that was
Mhm,
put on.
mhm.
Now, some could connect that in the market there is risk, but none of them connect that mortgages are also securities, that they create securities off of the debt from a mortgage and they trade those securities. Now, if they hear that, it's nope, that's going to go in one ear and out the other. Nope, that's not true. Mm-mm. You could show them a million articles that, yes, this is how it is. And so I paint the picture and I always ask people, what do you know about what you are doing right now? Because we need to find out what that is, like how comfortable you are in your own knowledge of what you're currently doing, so that when I advise this other aspect or if this makes sense for you, that you can see why this may be safer, right? Because they can get their mortgage sold a million times. Another company took over their mortgage, another company took over their mortgage, and they
Yep.
don't think about it. They get it, they don't think about it, right?
Yep. It's one of
Um,
those things when they say it sounds risky or when they say they're risk averse, what they mean is I just want to follow conventional wisdom.
I just want to follow conventional
To
wisdom.
them,
That's it.
risky means unconventional and safe means conventional. So
Yep.
they would follow all the lemmings right into the 2008 financial crash,
Right.
right? Have we
Right.
forgotten about Silicon Valley Bank so quickly, right?
Man,
You know, they're
I,
not worried about their money sitting in the bank account, I don't think.
I and what's interesting, I have a client who is this is a funny experience. She works at a bank and she does very well, right? So she reached out to me, and I always know when she's reaching out to me. Basically, it's just when we were in the appointment with you, I wasn't necessarily listening. Right. So I need help with this, right? And she's an executive. So what happens is she reaches out to me about the HELOC. She took the money and bought 2 houses, right? She does very well for herself. So she bought 2 rental properties with the HELOC. And then she calls me and says, "The interest is too high." I said, "Hey, your interest payment is high." "Well, you make this much. Why is your interest payment so high?" But I knowing that because she's telling me the interest payment is high, it's because she didn't follow the advice 100%. Because you wouldn't feel that way with your income flowing through it. You would just have your income flowing through it. So I asked her about, where are you sitting your money? Oh, I sit it in my other bank account. Why? Because I think it's safer. Why you think it's safer? You work at a bank, right? Yeah. I said, you ever heard of fractional lending? She said, yeah. I said, is that what your bank practices? She said, yeah. And I said, so let's just get this clear. You believe it's safer to borrow from a bank or leave your money in a bank that is lending 10 to 1 on your dollar than saying, hey, I have this relationship with my first lien HELOC, and all of my money is actually going towards a tangible asset, which is my own house, my own debt. And she said, I never thought about it. And she said, I got some calls to make. I said, how much money you got sitting outside of it? Oh, she said, I got a couple 100,000 in the other bank. Yeah. Why isn't it over here? Drop interest payment. What are you doing? And start flowing your income through. She's like, all right, now I got it. This same family buys probably 2 or 3 houses every year because they've gotten the concept. They rinse and repeat. They're not focused on necessarily checking. They're focused on investing more and doing more for themselves. It just takes a person connecting and saying, it's okay for me to get away from what's conventional. I can try it. It's all right.
Right. And clearly, conventional wisdom is not making the average person rich or financially free.
No.
This is
n-
all about more efficient cash flow management, which is something that people don't think about. They're locked into the return on investment mantra
Yep.
because they think they can use every dollar once, when in fact, what you can do with velocity banking and infinite banking is optimize your cash flow. So now every dollar is doing multiple things for you,
Yep.
right? So we're creating that velocity of money. That's where I think velocity banking comes from. So D'Andre, I know you're still just a scam artist. You're still evil.
Absolutely.
I don't have the names to call you at the moment. I've run out of names to call you. So I'll find some more. Don't worry. I'll keep finding
Look,
more.
hey, Logan, I started the appointments.
Work on the evil laugh. Work on the evil. Yeah, after you jump into your pool full of gold coins,
I
that's
know,
what you
man.
do.
And my rich toilet too. Don't forget that. Don't forget that. I love that thing.
All right. Well, D'Andre Clayton, thanks so much for your time unraveling this scam of velocity banking and this evil of first lien HELOCs so we can get people back into the herd, the conventional wisdom where they're, of
Absolutely.
course, going to do wonderfully well.
Absolutely. Absolutely.
Thanks so much, D'Andre. Bye
Much
bye.
appreciated, my friend.